Hey, this is Mark the Meerkat with the weekly technical analysis of the broad markets in for D7. Now, D7 is off the grid, so I am not D7. I'm sorry about that, but you're going to get Mark the Meerkat this week. He's going to be off the grid for about 10 days, so stick with us and we'll still try to give you the best technical analysis that we can on the broad markets. So let's take a look here first at what happened on Friday when the markets were mixed. So here we got S&P up 0.05, just about flat there. The Dow up 0.48, but then we had the NASDAQ down 0.6 and the small cap Russell down minus 0.7. So mixed on Friday. It's kind of been mixed all week long, but slightly bearish here. After the big drop last week, we had a 4-day trading week this week here. So let's go ahead and take a look here at the S&P 500 daily chart here. Each candle is worth is 1 day here, and we had run, new all-time highs, and then kabam! And then these 4 days, look at this. We bounced up, we hit our heads on the 20 moving average, and now we're back here to the, we tagged the 50 moving average on Friday, and then did pull up here, closing right in this area. Now this is kind of interesting here. So this 3300 is just about tagged 3300. That was right here was resistance here for a long time. So this area is could be a possible strong line of resistance here. Of support. This 3300 area here. And so are we just stalled here, ready to gather some strength and go higher? All the broad markets here are just kind of in a quandary as to what it wants to do. Or are we just catching our breath here to ready to take a deeper dive? Don't know, but we have some very mixed signals on the market. Right now, one signal is it's stalled here just above a major line of resistance, now could be support. And it's above its 50 moving average on the S&P. And the volume here is still relatively high, but has dropped off here the last couple of days, but still at a relatively high level. So that's again a mixed signal. Now we have the Dow Jones Industrial Average here, and it went up here, did not quite reach all-time highs here, and then it had its big pullback last week, week before last, and then this week, these 4 days, it just kind of fluttered around here, hitting its head on the 20 moving average, but staying above its 50 moving average. Now these are on the indexes that I'm looking at. Normally Des is looking at the ETFs on the indexes. So the actual indexes here, they're still above the 50. So that it's still above the 50, so that's still bullish. We're still in a bullish uptrend. We're in a leg down, and now we're basing here, right here at the 37,500 area. So, but look at that. Look at this here, right here. See, look at that. That was resistance here on this swing high, snapped down. Then it was support right here, and now it's right back to that support area. It did break a little bit below that, so we have to be conscious of that. So again, it's resting there in that area that it was before. Now we got the NASDAQ again. The NASDAQ just made the huge run up here, and then it did pull back here almost, so 12% now off its high. And now a couple of negative signals here is it's now closed below the 50 moving average here, bounced up, it got near the 20, and then right here it closed on right at it on Thursday, and then Friday, bam, we are below it here on the NASDAQ now. So that might be a crack in the ice here on its support area. Or another way to look at this is take a look here at this prior support area, prior resistance here, then with support, and then it's support, and it's support again. So it could be a crack in the ice based on the 50. That would be bearish, but it's still holding support here, and that's more bullish, ready for a turn up. Again, we very mixed signals here. And so we got the small cap Russell here, which has been weaker than the others. This is its opening line from 2020, and it's not gotten back up to there, and it was here, and it was high basing here, and then the support line extended out. This could now be resistance on the way back up, and just cannot stay above that, get above that 1600 there. It came down to its 50 moving average, was basing in that area, and then on Friday it also, bam, crack in the ice, falling down there. And again, another way to look at that, what was prior support and resistance areas, right here. This was a resistance, 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 came right back to here, and it's staying above that, and it closed right on that line. Closed right on that line. So, you know, you can look at it. Oh, it cracked the ice here. Watch out, it's going to drop like a rock. Or you can say, oh, it's holding support, and it's just going to, it could be basing here for a while, and to build strength to go back up again, or not. Let's take a look at bank. Again, bank has been lagging here too. I mean, look at this. This is where it opened in 2020, and up here is its all-time highs. So it has been lagging the market, and you know the saying is we can't go anywhere without bank. Well, we're not going anywhere without bank. We're not even close to the 2020 opening, as well as not even close to its all-time highs. So it's been lagging here. Big, huge symmetrical triangle, and it came down here, and guess what? Again, from this point and this point, it came and closed just below it there. It tagged it on Thursday, just below it on Friday. Is that a crack in the ice? You know, this 2600 here, is that going to be a support area? And again, you can draw back here, looking at the horizontal support areas. And again, this is not a perfect deal here, but let's see, let's draw it in. And here it was right through here. Again, this was sorry, there. Look at this. It's like a magnet line. It's like it pulls down, it gets pulled back up. It goes up and it gets pulled back down. It tries to go up, it gets pulled right back down, right to this 2620 area. Don't know why, but so again, in that end, it's in a symmetrical triangle. So this does not give us a bullish or bearish sign, and it's just been going sideways. It didn't come into it from the bottom, it didn't come in from the top, it just came in from it sideways. So no strong signals here. In other words, the markets are very, very mixed right now. And what about the fear in the market? Well, let's take a look at the VIX index. Again, this is a inverse indicator, in that the higher the VIX, the higher the quote-unquote fear is in the market, that the market's going to drop. And I'm going to pull this together, pull it in here so we can get a little bit of history. Normal range on the VIX is around 15. If you're below 15 here, this is really complacent, as we were at the end of last year. Look at that, we're down here in the 12 to 15 range. And then, of course, when COVID hit, it rocketed up here in the 80 range, but it stayed up here for a couple of weeks. It stayed above 60. It was a very, very, very volatile, 1,000 and 1,200 point swings every day. But then we have then slowly it came out. Again, COVID hasn't gone away, and the economic impact of COVID is not known. But as soon as they started to come up with some plans to reopen different things, just plans to do it, and it started to drop and drop and drop. And then we had this spike, and again, this is more typical. You get a spike up, and then it does drift back down around this 200 moving average. But then it was sitting here just above 20 to 22 range for almost a whole month. And again, that kind of became the new COVID normal, because still there's a lot of unknowns as how it's going to all play out and the impact on the markets. But it's looking out, and then suddenly we had this big huge spike here this past week where everything started to drop, and it was staying above 30 here for a while. And well, then finally on Friday here, let's stretch this back over. It was staying above that 200 moving average. It finally broke below 28 here. It closed at 26.87. So we're getting back into the 20 range, which again, under quote-unquote normal conditions, that would still be considered very high on the volatility. But it's getting back down into this 22 to 24 range again, as the fear is starting to bleed out of that. So again, it's a slow bleed. It's not, it's not sudden, and of course down here was just dragging here. Still relatively high volatility, so swing trading, it can be difficult, especially when it rockets up like that on a couple of days. Stopped out of many of my positions that I was in, and they had reasonable stops on them, and then they dropped unreasonably, right? Okay, so that's on the broad market. So what am I saying? Lots of mixed signals on the market from a technical analysis standpoint. The markets have pulled back, but they pull back to areas, support areas, and some of them have dropped below their 50 moving average, which is a more bearish sign. Others have held above the 50, and they're holding above their prior lines of support and resistance, and so it's just like No. Do I know what the future is? No, I don't. And when I get to my rant a little bit later, you're going to know what I mean by that. So, what do you do right now? It's kind of wait and see. What's the market going to decide to do? It's going to continue to the downside, or is it going to base for a little while or roll up? I know that those are the questions that we always ask ourselves, but right now we're getting mixed signals. There's no clear signals as to which way the market may be going next. Now, if you'd like to, before I get into some of the FANG stocks here, would you like to learn to trade the Grok trade way? Next weekend, I will be leading the 301 mentoring class for Grok. And if you're interested at all, you just go to groktrade.com, groktrade.com, and right up here it says Trading Mentor. And what our mentoring program is, it starts out with 3 intense days of training, and then we are mentors from that point forward to wisely take that knowledge and apply it to the markets. And that's part of the package, is we are there to assist you in doing that from this point forward. So there's also the 101s and the 201 trainings, which will get you as to what trading is, and then the 201s are to prepare you for the live training with me, which will be again next Monday the 19th, 20th, and 21st. That's a Saturday, Sunday, and Monday, if you can be with us. And again, it's from at 9 o'clock Eastern time to 5 o'clock Eastern time, primarily on those 3 days. So if you can be available with us, and if you're interested at all, why don't you sign up for a call, and you can talk to our coaches that we have out there, First John and Second John. And if you want to read about it here, there's a lot to read about it on that site that I just identified to you. Here's where you can sign up for that discovery call. It's just a discussion about what your trading is. It's not a sales call. And we'll see if it's appropriate for you to be in our mentoring program or not. And again, you can read a lot about it down here, and whatever works better for you. So that is again next weekend, Saturday, Sunday, and Monday. All right, let's get into the FANG stocks here. Here's good old Facebook. What's happening with Facebook? Well, guess what? Guess what, huh? What's happening with Facebook? This was a prior line of resistance here. It was high basing here. It popped up and to 300 and then snapped back, and guess where it's stopping? Right here at that prior line of support. Again, these are some of the largest cap stocks these are the largest cap stocks on the market. And so if the broad market indexes are doing this, guess what's happening to the individual stocks? Here we got Apple, same thing. It was up here again. This is after the split, pricing wise, but it's got this area here. It was basing right in this area here, where it pulled back to right to 112, and look, it closed at 112.00 on Friday. It closed right on that line, So this is a possible line of support and resistance, and there we go. And sure enough, it came right back to this possible line of support. Is it going to go lower? I think it's more likely to base here for a little while and then build some strength to roll up. That's my opinion, but it's worth what you're paying for it, I guess. Amazon here was in a symmetrical triangle, so again, the apex of a symmetrical triangle can be a strong line of support and resistance, and sure enough, it came right down to that area here, but it too just closed below the 50 moving average, so that's a little bit of a crack there. After being up here above 3,500, it's back here to the 3,100 area, and so is it, which is about where this apex is on this symmetrical triangle. So a lot of consolidation here could hold the price there from people who had bought in prior at that level. Netflix here, it did not have the big breakout the second time around here. It was in a symmetrical triangle. It broke out, and now it's right back again to this support line from all the way down here, as well as the apex area. But again, this 482 area here acting as support. This is a little more bearish because it has broken below the 50, and it's down here actually below some of the support areas that it had. This one could look more like a short, a little more bearish than the others. And then we have Google here. It was basing here for a long time, and then it broke out to new all-time highs, and then snapped back here, and guess where? Yeah, right there again, right to areas of prior support and resistance. So that's it. The FANG style. Oh, Tesla. Let's do this through Tesla into the tank. This was just this was just unbelievable, between Tesla and Apple announcing that they're just going to split the stock, and it runs up all the way up here. I mean, it's unbelievable. And now it has pulled back almost to that area. Well, so this is where, just before they had made the announcement, right here's where they made the announcement they were splitting the stock, and it ran up. Again, splitting the stock adds zero value to the stock, zero. And anyway, it ran up here, now it's pulled back. And what did it hit? It hit that 50 moving average, and it has made its bounce off. So the others have, kind of leveled off and are low basing. This one actually bounced off of this on Monday, and it did come up off its lows from Tuesday, since the markets were closed on last Monday. But it's hitting its head right at that 20 moving average. Look at that little wick there. Tagged it perfectly, and now basing here at the 372 area. So this one's looking a little more bullish than Google that we just saw. All right, that's it on the FANG stocks. And oh, well, no, let's go ahead and take a look at Microsoft too. Microsoft here, again, it broke out, came back, and right here was its prior resistance area, then prior support here right at 200. This is the 200 even dollar area. So it could, could stay here just above the 200 for a while and it'll work its way up, but it is below its 50 moving average. So again, we're getting mixed signals here. The market hasn't really decided, so it's a fight in the phone booth right now in the general markets. So let's see what it decides. Wait till it decides. Don't try to anticipate or try to predict what's going to happen. Wait till it does happen, but be in position to get in either to the long side or the short side as you move forward. Alrighty, that's it on my analysis. Let me get into to my rant. I know that Des likes to do his little chats afterwards here. So after the analysis here, my pet peeve out there is the talking heads on TV. These financial channels, and they tell you, oh, this is going to happen, that's going to happen. Oh, because of the EBITDA is this and all of that. It's a story, folks. They are salespeople. They are entertainers. They are there to entice you to continue to watch. They are not imparting knowledge to you. I'm sorry, they're not imparting wisdom to you. Now, there's knowledge and then there's wisdom. Wisdom is knowledge rightfully applied here. Now, these folks don't friggin' know what they're talking about. They are just making stuff up as they go along. So, case in point, at the beginning of each year, each calendar year, right, they have, here are my 5 predictions for the next year. And it would have these big talking heads come on, and, these real smart people tell you all about it. Well, in January of 2019, and I thought they should always do this, on CNBC, they were going to have Steve Leisman, who's on there every morning, analyzing different data. Well, he was going to do his predictions, and I always thought they should do this, and this is what they did. They said, well, let's take a look at his predictions for 2018. And they had 5 predictions for 2018, and they said, well, and they went through each of his predictions from the prior year, and 1 out of 5 came true, and that was that the Fed increased interest rates. But it didn't increase it as much as he said they would. They just did increase interest rates. So 1 out of 5, his predictions came true. So I said, so now here are his predictions for 2019. And I'm like, who should friggin' listen to this guy? 1 out of 5? Thank you very much. I'm better at throwing darts at a dartboard, right? So, and there's a book that I have about about managing risk like Swiss bankers do by Gunther. But in there, one of his axioms is, if someone tells you they know the future, turn around and run, folks. Nobody knows the future. When we do technical analysis, it's just telling us what the probabilities are that it'll either go up or go down. It's all about probabilities. It's not about trying to predict what's going to happen. So if the probabilities are it's going to go up, we set an order there and then let the market come to us, folks. That's what you may hear us talk about that on our different videos. Yeah, it's only when it breaks out do we want to get in. That's when the odds are in your favor. Or only when it breaks down do we want to get in. Then the odds are in your favor. Trying to play it when it's in the middle there, that's a fool's game, folks. That's a fool's game. And again, that is gambling with your money. That's not trading. Trading is analyzing it, use technical analysis to tell you when to get in and at what point to get in and when the odds would be in your favor. So if you'd like to learn how to do that, our mentoring program is next weekend, the 301. Just go to groktrade.com, Be glad to get you up and running here next week. This is Mark the Meerkat. Have a great trading week, and may your winners run.